Good morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, December 8th. Well, we had a nice little move up yesterday. Buy programs kicked in after a small push lower right around 10:15. Markets rallied higher. Dow actually rallied first, and then everything else started following suit. And algorithms just kicked in and out of control, just kept on buying all day, no pullback. However, when I talk about the high probability trade, that was a very easy type of trading yesterday, and I'm going to explain to you why. When you have markets that pull back a little bit and then they started basing during the course of the day, at least they started off basically flat, up or down, maybe a couple of handles in the futures. When they start to base like that and then they start picking a direction, and remember, breaking out of a first 15-minute range, up and or down, will tell you that there's either more buying or more selling. And that's what happened yesterday. It was really simple and easy to go for a day trade, to go in and look to just follow that trend all day. And that's the high probability trade that we talk about. Plus, of course, we have our TMT proprietary price channels that once we break out of there, there's a lot more involved that we talk about at TMT with our subscribers. But a real simple and easy trade. Remember, you don't have to trade every single day to make a good living out of trading, and also it reduces your risk, limits your exposure to the market. So remember that, guys. All right, now internally the markets are still deteriorating. Okay, now unless the markets improve here, I'm just showing you one of many that TMT follows. You have negative divergence as price is moving higher. You can see that here clearly. We've pushed up for the last 3 days, but the internals have not. So that's a huge red flag. Now remember, it's a red flag. That does not mean that we're looking to sell everything and go short. Absolutely not. What this really means is that you have to be on high alert. We have a risk event happening this morning. We have Mario Draghi at ECB talking about rates, and then of course we have our December 16th meeting with the Fed. So those are two big risk on and or off events that are going to happen here, and that could rattle the markets. Also, we are coming into everybody doesn't speak about this, but we're coming into a tax selling period, which we are notorious for markets to sell off. Now, can it happen? Sure. Does it have to? No. It could. They could literally, people that don't want to sell because maybe there might be benefit of selling into 2017, that may happen as well. Markets could continually go up. I mean, I personally, when I see something like this, there's a total frenzy of buying, and there's no support of dollars, meaning that money's coming out of the market while price is moving higher. That's actually really scary. Okay, if I was a longer term investor, I would be hedging right now because the VIX is basically at almost all-time lows. Puts are extremely cheap, and it would be crazy not to hedge to try to get through this tax selling period and even going into 2017. Okay, but you can see here we have negative divergence in our advanced decline with volume, which is very important here. Okay, even though we're above zero, this move here, okay, we're not even close to it while we took out this move in the last 3 days. So just something to consider. Let's talk about gold. Gold here, bullish percent, gold miners index. We're in the basement here, which is nice, in 0.5. To me, it looks like that gold is starting to base. Remember, though, anything could happen between ECB and rates next week. So to me personally, I like to stay out and get those two risk events out of the way and see where gold really is going to go. But I do like the fact that we're down here near at washout levels. Okay, here's gold itself, GC, the gold contract. Here's gold. We're sitting still just underneath that, well, just above it actually. 1173 was a 61.8% retracement. Remember that thin zone I told you about? I'm still skeptical. I'm not looking to buy gold here at the moment. We have ECB again today. Don't forget the Fed, so that's going to definitely push gold around. But I do like the fact that we're starting to curl up a little bit in our momentum indicators, MACD, Stoke. Money flow starting to come in a little bit here, you can see, but still needs a lot more work, And we're definitely oversold, but definitely oversold is not a buy signal. Here's GLD. Again, just showing you where we are here. And again, I'm looking for one more push lower, base like we are doing here, and take out that swing high of the base, and then we'll start looking to get long again. But you can see here, guys, we're starting to create some sort of a valid base here. Okay. But something that we still need to monitor here. Okay. Next, we're going to go right to the GDX, And you can see here, same thing. Again, I'm looking to see one more flush break out of the 61.8% retracement to break down, but we are getting some positive divergence as price is just moving sideways. So that's actually a very good sign here. All right, next let's take a look at the indexes, and I should say, look, anybody coming off of a 2-week run and then 3 more days in this explosive move here, to me, and I'm very close to calling capitulatory top, where the market just capitulates to the upside and just says, I want to buy even more up here. I mean, it's just insane how people meaning traders, retailers, looking to buy stocks at all-time highs up here. It's absolutely insane that they don't think the markets are going to pull back. And again, we're not talking day traders. I hear just a lot of pundits on CNBC thinking we're going to go to 2,900 in the S&P and 3,000 and 22,000 in Dow. Sure, with all due respect, in time. I mean, but you're here. It's just crazy. I would never add any positions at these areas, at these highs, at all. Especially when you have a 2-week run, Russell up 14%. That's almost a year and a half's worth of gains in 2 weeks. That's just crazy. I mean, and going on based on what Donald Trump said he was going to do. Not that he's even putting it in place yet. He hasn't even taken the reins as being a president. That's just crazy. I think that it's just this is why I say that the markets are broken. And remember, guys, it's only one-sided to the upside. What happened if it was going to the other side, to the downside? Everybody would be in a panic, you see. So remember, and it could happen. People don't think markets could go down, but it's just a matter of when. No one knows when, but I can't see the market just continually going up on basically no volume here. This is basic average volume, and I want to show this to you. Day trading is a little different. It doesn't matter. Whatever the day brings, it brings, and you pick the side and you trade. Manage your risk accordingly. But when you're managing, you guys are managing your own portfolio, and you have retirement accounts, which is great when you're long, but don't add to any positions up here. I mean, look, to me, here's distribution. You had that one move higher here. We had a lot of gain. That marked a good inflow of capital. That's okay. That's fine. But when you have this, you just average volume all the way across, and this here, the internals are not confirming what this move is based on. It's just scary, just very scary. But anyway, 219.70 support, 217 are your first two. Areas here. If and I laugh at it, we were to get a pullback. IWM, listen, I'm going to move this up here. This right now, where is our high? So I'm just going to pull that. That's going to bring us to the upper end of this gap area support of 38%, which I'm still looking for the first pullback. You're going to have support here at 130 and a quarter. Okay, that's that pullback that we had to the 21 EMA. So that's going to be your first area, and then of course down here for pullbacks. Remember, you got to look for pullbacks at one point. Market's going to pull back no matter what. Somebody's going to sell. Remember, guys, we had over $5 billion come out of the market on close orders the last 4 days. Yesterday was just out of control. There was another $1 billion for sale, and then we turned out to be $1 billion to buy. So I can't put. I can't tell you something I don't know. It's just absolutely insane at these levels, 7-year highs. It's just crazy. Like it seems like the market just, it's never going to go lower. I mean, just crazy. But anyway, NASDAQ followed suit too as well, so that's a decent sign. Apple caught a little bit of a bid. It did get downgraded, but it did catch a little bit of a bid. So, watch out for ECB. Watch out for the Fed next week. And let's see if we can get some sort of a pullback where, maybe... it's good to have a pullback for corrector to reset some of these internals, because market internals are saying something different. So we shall see, guys. Be careful out there. Dangerous market.